to a talk on the rise of China in the international monetary system by V.Srinivas, who belongs to he's a distinguished officer of the Indian Administrative Service and belongs to the Rajasthan cadre of the service. Mr. Srinivas is presently Additional Secretary in the Department of Administrative Reforms and Public Grievances in the Ministry of Personnel at the central government. He has in the past also served as Deputy Director Administration at the All India Institute of Medical Sciences in New Delhi, where he was responsible for introducing many innovations in the administration of AIIMS, as a result of which the experience of outpatients has vastly improved. In his home state of Rajasthan, he was chairman of the Board of Revenue for Rajasthan and chairman of the Rajasthan Tax Board. Of course, earlier in his career, he served as a district collector at Jodhpur and Pali, water-stressed districts. This work that he has done on China has grown out of his experience at the International Monetary Fund, where he was advisor to the Executive Director for India during the period 2003 to 2006. He has written two major books: India's Relations with International Monetary Fund 1991 to 2016, and A March to New India, India's Welfare State. This is a chapter in a forthcoming book which is to be published by Routledge. We look forward to your talk.
Thank you.
Respected Chairman Dr. Indira Rajaramanji, Srimati Kalyani Shankarji, distinguished participants, I am deeply privileged to speak today at the India International Center on a subject of considerable contemporary relevance, the rise of China in the international monetary system. Madam Chairman, I am aware of your seminal work in the field of fiscal federalism as a member of the 14th Finance Commission and as a leading thinker of India's economic policy making. Thank you for chairing today's session. My interest in China's economy developed from my first visit to Beijing, Shanghai, Xi'an, Shanxi, Hong Kong, Dalian and Macau in 2001 with the Indian delegation led by the External Affairs Minister for talks with his Chinese counterparts. Thereafter, I had the opportunity to visit China heading Government of India delegations from the Ministry of Textiles for cotton and cotton yarn export related issues. In my years at the International Monetary Fund, I interacted closely with the Chinese Executive Director Office in Washington, D.C. and watched their economic progression. I'll divide my paper into the following. The Dai Xiong years from 1995 to 2002, the Zhao Ziaochuan years from 2000 to 2017, China's economic reforms and response to the global financial crisis 2008 to 2010, the renminbi internationalization, China's influence at the IMF and international institutions, and lastly, the latest developments in the Chinese economy up to 2018. The rise of China as an economic superpower, the second largest economy in the world, the largest in purchasing power parity, contributing 1/3 of global growth and 15% of global exports, represents the greatest economic transformation the world has seen in the last 30 years. Successive waves of reform have reduced poverty and catapulted China to middle-income status, accompanied by an infrastructure boom with an array of roads, airports, high-speed rail systems, high-rise buildings, and other infrastructure. A few provinces of China have already achieved advanced economy income levels, and China's per capita GDP continues to converge to that of the United States. Over 800 million people have been lifted out of poverty. Life expectancy and literacy have increased significantly. The growth model is based on high investment, relatively inexpensive labor, productivity enhancing foreign direct investment, and strong global demand. 2018 marks the 40th year of reform and opening up of the policy, and China's developmental challenge has evolved from meeting people's basic needs to their ever-growing needs for a better life. So these are the chapters that I would be covering, as I have indicated, 1980 to 97 when it was a cooperative member of the IMF, 97 was the Asian economic crisis and China did not devaluate the renminbi. 2004, China started the RMB internationalization. 2009, China emerged as an economic superpower, and 2015, the RMB is included in the SDR basket of currencies, and followed by 2015 when IMF reforms happened, and 2016 they hosted the Hangzhou summit of G20 leaders. We've already discussed this. Since the initiation of economic reforms, China's economic growth has been marked by periods of cyclical surges in economic activity and inflation followed by periods of retrenchment, with two cycles in the 1980s ending in hard landings. Particularly notable was the 1986-90 cycle, which began with the relaxation of the monetary and fiscal policies. Inflation rose to 19% in 1988, and efforts to curb inflation meant growth slowed sharply. The 1991 to 97 cycle, as depicted here, was initiated by a rise in central and local government spending and easing of back credit. By 1992, an investment boom was witnessed and GDP growth exceeded 14%. Liberalization of food prices and public sector wages led to massive inflation, and inflation peaked at 24% in 1994. China had to adopt policy measures to cool the economy, and these steps included an increase in interest rates, tightening of central bank credit, and limiting investment approvals. China eventually achieved a soft landing of the economy with inflation to single digits by 1996 and reduced food prices. However, the credit boom of the 91 to 97 cycle led to weaknesses in financial sector, rise in non-performing loans in the banking system as banks funded state-owned enterprises with little regard for credit risk. The Asian financial crisis left China largely unaffected. The Chinese economy fared well. GDP growth was marginally lower than the previous years of 9%, inflation was at a 5-year low, and exports grew at 20%, contributing about $40 billion trade surplus. Foreign direct investment was about $45 billion per annum, and foreign exchange reserves reached $139 billion by the end of the year. Yet in the region, there was gloom. Severe economic recession was witnessed in the crisis-hit countries of East Asia, further aggravated by the Russian crisis, and there was a financial strain witnessed in Latin America. As global recession threatened, China called for concerted global action for strengthening the architecture of international financial system. China recommended that the IMF should establish a mechanism for monitoring short-term capital flows and movements of speculative capital. They also supported strengthening of the fund's early warning system based on enhanced information disclosure and transparency. This was a feature that was seen in China's responses to the international crises all the way up to 2017. Chairman of the People's Bank, Dai Zhongliang, said that the Chinese government had taken a highly responsible stance during the Asian crises and the turbulence in the international financial markets. Further, he said that great efforts were made to preserve the financial stability in the Hong Kong Special Administrative Region. Despite the optimism of Dai Zhongliang, there were severe critiques. Nicholas Lardy wrote in the Foreign Affairs saying that China's financial and banking system suffers from inadequate central bank independence and lacks regulation of commercial banks. 3 of the 4 largest banks did not even report their consolidated balance sheets. Non-performing loans are classified by lenient standards than international norms, and there existed losses due to fraud, corruption, and other lending irregularities. Despite these vulnerabilities, it was felt that China was not affected by the Asian financial crisis as the currency was not convertible for capital account transactions. China's capital flows were largely for direct investment with a long-term horizon. There was hardly any exposure to foreign capital flows, to bank deposits, bonds, stocks, or any other financial assets. Let me take you to the Dai Xianglong years. Dai Xianglong served as the 10th governor of the People's Bank of China from 1995 to 2002. It was in his tenure that the reorganization of the People's Bank of China was undertaken. The PBC removed all its provincial and municipal branches, which were headed by local politicians, and established regional branches to strengthen the independence of the central bank. Reform of commercial banks was pursued, with the establishment of asset management companies to purchase non-performing assets of wholly state-owned commercial banks, thereby reducing the commercial banks' non-performing loans. The PBC also established a supervisory council in each commercial bank. Dai Xianglong had a view on the international reserve currency, fund surveillance, and capital account liberalization. He said that the current financial system cannot solve the balance of payments imbalances, which has repeatedly been the cause of international financial crisis. To solve the problem of the international reserve currency, the international community should consider additional allocation of SDRs and create conditions to increase their use and strengthen the fund's function of providing liquidity to its members. China also considered financial cooperation to be a helpful complement to its existing international financial system. Economic integration in the Asian region was represented by the Chiang Mai initiative. China also became an active member in currency swap arrangements with ASEAN countries and Japan and Korea. In 2002, despite being a net debtor and a low-income country, China made a contribution to reducing the debt burdens of HIPICs and the poorest countries. Let me take you to Zhao Ziaochuan. Zhao Ziaochuan is called China's most able technocrat. And every time I heard Zhao Ziaochuan, I felt that he was an individual of cerebral brilliance, bringing out a series of far-reaching reforms in monetary policy and also in banking supervision. Zhao Ziaochuan's tenure can be divided into three phases. The 2002 to 2007 period, where he pursued exchange rate flexibility, capital account liberalization, and reform of the banking system at a time when China had favorable medium-term conditions. The 2008 to 10 period, in which China had to formulate a response to the global financial crisis and handle near-term domestic risks. And the 2010 to 17 period, where China pursued policies of renminbi internationalization, financial sector reform, and underwent the transition to a sustainable growth path and reforms. It's important to understand the Zhao Ziaochuan effect on China. And as can be seen, the real GDP growth rate in 2000 to 2007 period was about 10.5%, 2008 to 10 period was 9.8%, 2011 to 14 was 8.1%, and 2015 to 17, when they wanted to recalibrate